All right, Brian, climbing up the risk ladder, we've got our last stock. And I think this is probably for folks that have a little bit of a longer time horizon. It's a steady business, but there's a lot of growth priced into it. And that is Adobe Systems, maybe a name that a lot of people interact with, but haven't quite thought about investing in.
Yeah, Adobe is kind of like this company that I've known about for years, and I never really dug into it. But once I started to really understand this business, I mean, this is a $110 billion company, so it is huge, but it is a top tier software company, and it's actually one of my favorite stocks in the entire market right now. So most people are familiar with Adobe's what's called its Creative Cloud SaaS offering. So that's where it has products like Photoshop, Illustrator, Premiere Pro, Acrobat, and a lot of those products are basically the gold standard in the creative community. So like millions of designers and videographers and animators are trained and use those products, and they can't do their job without them. So it's just an extremely dependable business. But beyond the Creative Cloud products, Adobe has actually been moving into what's called a digital experience unit, and that's where it provides cloud-based marketing and analytics tools to enterprise customers. So it can help with creating marketing campaigns, analyzing them, and really increasing your presence in the e-commerce market. So they actually have a sizable business that serves specifically business and enterprise customers.
I think something that's fascinating with this stock in particular is we go back and look at the history. The stock did not fare particularly well during the 2007-2008 recession. Stock fell about 65% from its 2007 high. But you look at how the company performed this past year, when the S&P 500 sold off about 4%, they posted what, 29% gains?
Yeah, and the comparison between now and 2008 is not apples to apples, because a couple of years ago, Adobe switched its business model from doing a licensing model it forced all of its users to go to a software as a service model. So previously, during the last downturn, if somebody wanted to delay upgrading to the latest Premiere or the latest Photoshop, they could do so. Now they're subscribing to Adobe services, so that's a recurring bill that they're paying every month, regardless. So I believe that if a downturn was to come, Adobe's financial statements would actually hold up much better than they did during the last downturn. But even during the last downturn, the numbers weren't horrible. I mean, their sales dropped 13%. I mean, that's not great, but considering the market environment they were in, that's not terrible either. They were still profitable, although their net income did fall in half. But I believe that if a big recession was on the horizon, that their business model now would allow them to hold up much better.
And for all of us characterizing them as a high-flying growth stock, I mean, their valuation doesn't look all that different than Microsoft's. On a trailing basis, they're at about 45 times earnings. On a forward basis, 25 times earnings. They aren't as built out and established, I think, as Microsoft is. But to your point earlier, I mean, they are the de facto software for all of these enterprise clients that are doing anything in the creative space.
Yeah, and a few years ago, when they made the switch to a purely cloud-based, as we spoke about on our software as a service show, it did cost them revenue and profits in the near term. So their revenue and profits did hit when they switched their business model. However, if you fast forward to today, their revenue is growing at a 20% rate, and their earnings are growing even faster than that. I mean, over the last 5 years, this is a business that's put up earnings growth of 48% annually. I mean, that's just huge. And that rate is projected to fall to 22% over the next 5 years. But if you compare that to their valuation of about 25 times next year's earnings estimates, that's a very fast growth rate for basically a slight premium to the market. So I think Adobe stock will probably hold up pretty well because if it can deliver on its growth targets.
You know, Brian, I didn't realize this as we were planning out the show, but now that we've talked about all three companies, I see another thing that was not included in our criteria, and that is steady payments, routine purchases. You know, all of these businesses, whether it's Verizon with subscribers paying a monthly payment to them to use their network, or Microsoft with its software products, or Adobe with their software products, all of these have recurring revenue streams in one way or another. They are not banking on one big product release to make numbers.
Yeah, that's correct. I mean, when you can recount on recurring revenue versus a one-time sale, I mean, it is just the gift that keeps on giving, right? Your financial statements become much more dependable, and Wall Street generally rewards that with a more stable stock price.
And Brian, you did a write-up recently on Adobe, right? So if anyone wants that in written form rather than in audio, that is available?
Yes, absolutely. It's right on Fool.com.
All right, listeners, if you want that, shoot us an email over at industryfocus@fool.com, and we'll make sure to send that your way.